on the Daily Drive. Property Fast Track with Charles Tarbey. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Hey, welcome to Property Fast Track. Charles Tarbey's with us, Nick Bennett and Kayley Harris driving you home. And 13 12 83 if you've got any questions for Charles. Good to see you.
Thank you very much, Nick. Kayley, good evening.
Welcome to the program. How was the weekend? What did you get up to? Were
yes.
you wearing some sort of yellow jacket? And
I wasn't. No, I was playing golf.
Yeah,
Again?
He wasn't in the Tour de France.
I always tell, you've heard me say this before, Nick, I was inspecting 18 parcels of land. That's,
well mowed with well-mown grass.
yes, and, what have you done to me?
I was fixing your microphone. There you go.
There we go.
Thank you very much.
Is that better?
And was I yelling in your ear then, was I?
No, you're right.
We're going
And,
to tape that to Charles' head one day.
Or I always tell people, if I actually am on a golf course, and I say, am I interrupting someone? Look, I'm on a course at the moment. So it's really interesting how they leave you alone.
Can't talk now, I'm on a course.
I'm on a course at the
Self-improvement course.
Yes.
That's great.
Now, every week we talk about, different hotspots. So we're doing around the grounds. We look at different areas, and a little bit later on we'll be doing that as well. But just looking ahead to next year, it's coming up to the end of 2017. A lot of people are thinking, well, what's going to be happening in 2018. We're hearing that rentals in Sydney, rents are coming down because of the supply or oversupply of units.
Yeah.
So looking forward to 2018, can you give us maybe one hotspot suburb in Sydney, Melbourne and Brisbane?
Okay. Well, Sydney, I'm very consistent about Sydney because the pricing is still very, very low compared to the rest of the country. But you can buy in the south, in Campbelltown region, out south from there, or you can go south of areas such as Kellyville, Rouse Hill, and end up back in my favourite spots of Hebersham and Darrock, because I think those prices are still very, very low. And I like the Campbelltown sector because that freeway is really quite strong. And as that airport starts to take shape at Badgerys Creek, that is going to be another massive centre down there.
And already well serviced with a decent train line.
Yes, and so that's Brisbane, and you can go parachuting as well. So that's Sydney.
Sydney, yeah.
You can go parachuting as well, just down the road from.
You can,
Canada.
down
Yes,
at Wilton.
You can do
I've
that
done
too.
that. Yep.
Yes.
Okay, now Brisbane, what are our suburbs to look
Is that
for?
why all my team keep buying me a Christmas gift for parachuting? I've never taken one.
Yeah.
I wonder what that's all about.
Yeah, that's the complimentary pack with no chute. What are they saying about you, Charles? I've fired a lot of them.
Yeah, no, they'd follow me all to hell with a water pistol, but probably just to make sure I got there, I think. But so in Brisbane, there's still certain areas of Brisbane. See, I'm starting to pick the suburbs that have been downtrodden and spoken badly about for a long time. Okay. They're my favourite suburbs for next year because they'll get the growth. A lot of the top market and new areas have had the growth, and these other areas have sat idly by. It's like established apartments versus off the plan. People will go out and buy off the plan and pay a lot more without really just looking next door and seeing that there's an old block that's established that you can get a lot better value for. So from my perspective, it's picking those suburbs, whether it's Darra, whether it's Ipswich, whether it's Goodna in Queensland, or even going down to Melbourne, whether it's Noble Park. And these are suburbs that there's a lot of development going on around them. And so I pick those areas next year as being stronger areas than most other areas in those capital cities.
Huge amounts of growth on old blocks in spots like Glen Waverley too in Melbourne.
Correct.
Massive houses going in
Well, there are a lot of people, you look at the way in which construction is or land development is going on right now, and you're talking about blocks of land that are coming in at 250 square metres, like the old semi-detached. 400 square metre blocks. There's a very substantial subdivision on the table in Chipping Norton, as an example, which is incredibly well located. Compared to other suburbs where you have to travel so far away, and they'll be 400 square metre blocks.
Right.
So things are changing in that area as well. So those larger blocks, they're going to have some opportunities in them.
Just a final tip in Queensland, what are your thoughts on Noosa? Is that still good to buy?
The Sunshine Coast has had massive growth in the last a few years. The airport there at Maroochydore is undergoing, again, a substantial amount of cash being poured into it, I think up to 400 million. There's a significant private hospital being built in that area as well. And so you can jump on a plane and you can be in Noosa in 20, 25 minutes from the airport. I think the only thing that could cause that region to struggle a little bit will be what happens with the equity markets and the Melbournians, because they like to buy a lot of property in that area. So if the equity markets are good, the prices will continue to move.
Property Fast Track tonight. Charles Tarbey's here to help you. If you've got any questions about real estate, be it residential or commercial, or perhaps you want to get into investment, 13 12 83.
I'll throw one more in.
Yeah.
Crookwell, my hometown, I'd buy there any day of the week.
Yeah?
Yep.
That stood the
There
test
you
of
go.
time?
That has. Yeah, it's still there.
Not too far from the southern, in the southern highlands of New South Wales,
Well, it's
right?
past Goulburn, and people who live in Goulburn are now buying Crookwell because it's getting away from Goulburn. There you go.
And Goulburn's had a big development when it comes to being, or I think it's still in the throes of becoming quite a transport hub.
It is, and of course you've got the jail there, which employs a lot of people. You've got the police academy there, which is quite significant.
Yep.
But you'll be able to get in a car, I believe, and drive from Goulburn to Badgerys Creek in, an hour and 15, hour and 20. Depends on how you drive.
I've got friends who bought there recently, and they're convinced, I know Kayley won't like this, that they're hanging out for the super fast train that's going to rip through from Sydney to Melbourne and put Goulburn on the map.
Yes, Kaylee believes in that, I know.
I know, I do.
Yes, yeah.
Now, here's
not in my lifetime.
Not in yours, you reckon. Here's an exciting phrase for the ages. Broader-based land tax. Lol. But seriously, it's an important issue because what we're really talking about is stamp duty and how it's a pretty bad tax for a number of reasons. Most notably, this is a big one. It discourages people from selling because they'll be whacked with a massive tax bill. So here's a scenario. You work in the south of the city, you got a great new job, and you want to move to the north of the city for the job, but the cost of moving homes is just debilitating. Economists have long argued for the abolition of stamp duty, but politicians stick it in the too hard basket and nothing much really changes. But the Australian Housing and Urban Research Institute, or AHURI, has launched a plan which they think will cut through the political deadlock while being cost neutral for the states and affordable for households. Professor Richard Eccleston is leading AHURI's Pathways to Housing Tax Reform, and he's on the show tonight. Good evening.
Good evening. Thanks for having me on.
That's okay. From your perspective, what's wrong with the current system? What are the negatives of stamp duty?
Yeah, I mean, I don't think Australian property or land is overtaxed, but one thing that's pretty clear is it's badly taxed. So governments, and particularly state governments, and New South Wales at the top of the list, are highly dependent on that stamp duty, that invisible slug every time you buy and sell property. I mean, it raises over $20 billion a year now.
And you wonder why, don't you? You ask yourself, what is it that they do to charge you so much money? What are they actually physically doing?
Yeah, well, on a good day, I guess they're investing in health and education and infrastructure, and that's a separate debate. But it does have impacts in terms of affordability and particularly accessibility in terms of younger Australians accessing the housing market. But the big drag with that stamp duty is it really contributes to economic inefficiency for the reasons you're talking about. It really discourages us from moving to get closer to employment or to take up opportunities or to living in houses that suit our changing needs. And it's a real slug on younger Australians, particularly in big cities, where inevitably when you get on the property ladder, increasingly you're in small accommodation, apartments and so on that aren't going to be suitable for you later on. And it's just a real slug on those home buyers.
So, Richard, if you had your way and you had some input into reform, how would you approach it? How would you make it easy for me to sell my house and move across town without taking a massive hit with stamp duty?
I mean, if you look at a lot of other countries that I guess have bitten the bullet and taken sort of property tax reform a bit more seriously, they've gradually moved out of stamp duties, which were originally just imposed because they were really easy for governments to collect, administratively. It's a one-off. But they've moved towards, what we call a broad-based kind of property tax. So it's paying a small amount every year to fill in the gap. Australia, it's difficult because we're so, addicted to stamp duties. And also, I mean, when we were looking at it, another problem that we've identified in our report is just the huge variation in terms of stamp duty systems that are used across different states. And we're also the only country pretty much in the world now that has both councils and state governments imposing land tax. So we need to sort that out as a start and go towards a much simpler, sort of nationally coordinated system of valuing properties. So we've got a register of who owns properties, what they're worth,
Professor,
stamp duties, and then make the gradual transition to a land tax.
Professor, as long as I've known there's been land tax around, I've never known when it was introduced and why it was introduced. Do you have any information on that?
Yeah, I mean, the land tax dates from, well, in some cases, it almost preceded Federation. But Australian land tax is on a really narrow base. It's obviously, it's big in terms of commercial property and obviously on investment properties, on the 2 million or so landlords they've got in the country. Most other countries would impose a property tax right across the board, with exemptions for people on low incomes, or at least a way for pensioners, and this is often the crunch in terms of the politics, pensioners who are asset rich, whose family home is worth a couple of $1 million, but are living on the pension, then you need a smart way of making sure you basically defer that land tax liability.
Richard, would your reforms treat owner-occupiers differently to property investors?
And that's a thing that we've looked at, and no, not necessarily, particularly in terms of stamp duties. I mean, some of the kind of short-term, band-aid solutions to the challenges we're facing in the market at the moment involve putting a surcharge on investors. But we think that basically property should be treated similarly, with the only variable being the value of the property. So that we think that there should be a lower initially stamp duty and then land tax burden, the percentage of the value of the property on cheaper property, and then just slightly higher as the value of properties increases. And of course, the vast majority of investment properties are in the kind of bottom half of the spectrum in any given market.
Richard Eccleston is with us tonight talking about a broad-based land tax. So would you advocate for any changes to the way that commercial property is slugged a land tax, for example?
To focus on residential property, we've kept commercial land tax and property tax out of the equation. But one place where they intersect, and there are many overlaps, looking at the land tax system in Australia, one thing that it does in all of the states pretty much is it really discriminates against larger scale and institutional investors in residential property. And that's because it has this feature that some of your listeners might be aware of land tax aggregation. That is, if you're one of the 600,000 Australians that owns more than one investment property, you've got to add the values of those properties together, and then you start paying a really high level of land tax. I don't think that's in the interests of the property market, and particularly in the interests of the increasing number of Australians who are going to, have to rent basically for their entire life.
That's a real impost, isn't it?
We can all agree that we need more bigger scale institutional investors investing in residential real estate in terms of new builds, so that we can increase that supply over the longer term.
Just finally, it's slightly off topic, but has a connect. Do you think that the dropping of land tax in some states across this year has been helpful in getting people a leg into the market?
Probably not in the short term. In fact, it's probably the opposite. I mean, I guess where a lot of the incentives have been in terms of stamp duty concessions, and they probably have a small positive impact.
Professor,
the sort of concessions that don't make any sense in the long term, sort of first homeowners grants and first home builders grants, they really just shift, purchases through time rather than making a longer term, having a longer term kind of advantage or dividend. Thank
you so much for your time.
It's a pleasure.
Professor Richard Eccleston there is from the Australian Housing and Urban Research Institute. 131283 is our number. G'day, Sean.
Hi, how are you going?
Good, thank you.
What would you like to say, Sean? How can we help you tonight on Property Fast Track?
My question is around negative gearing and the impact that it's actually having on the prices of residential property. And I'm very interested to hear what Charles's view is, how long our housing market can tolerate the impact that negative gearing is having on the artificial inflationary impact of housing.
There are parts of the world where negative gearing doesn't exist at all, Sean. I know, and in Canada, when I was talking to the guy, there's a hybrid version. In New Zealand, I don't think it exists at all.
That's right.
But I do think there are other ways in which people can claim. They have started to change the way in which negative gearing has been treated, particularly just recently where people were jumping on flights and popping up to see their investment property from maybe Melbourne to Brisbane and spending time and money, but really having a holiday. So they're starting to scrutinise it very well. I do think that there is a place for negative gearing because it is like any other business, money in, money out. But to some degree, it's been really treated very, very shabbily.
But Charles, can I ask, do you really think that residential property should be regarded as a business? I mean, we're talking about a house for someone to live in, a basic need.
Well, yes, because you've got an investor. Now, the investor's bought the property, they've got interest payments, they've got income, they have to declare their income. If they make more on their rental return than they do on their expenses, they've got to pay tax. So it's still relatively like a business, but I just think it's too broad. I think it needs to be looked at. And I think both the current government and any future government, or certainly the Labor Party, were looking at changes to it. And I think changes are necessary, but we do have to remember that I do think it's a business. If people make a profit, they've got to pay tax.
Okay, so just so I guess for listeners, with the way in which that it works now, there's been lots of commentary already in the news in the last 3 or 4 months because there's obviously been speculation about will interest rates remain on hold forever, and what will be the impact of a lot of those investment properties where people really have heavily geared themselves negatively because they're obviously doing it that way. What do your forecasts or research show in that space?
Yeah, I think people are treading in very dangerous territory right now, Sean, because they don't know that the impact of interest rates that could kick in could really damage them, and the declining rents. So, again, that makes a little bit of a case for negative gearing, but it's certainly going to cause some problems for people who are unprepared, Sean.
Thanks, Sean. 13 12 83. Charles Tarbey tonight.
Questions. Yeah, great
questions. Yeah, taking your calls on that number, 13 12 83, or you can email Charles, talkinglifestyle.com.au. We'll go around the grounds in a moment. We'll head into Glenfield in New South Wales with a C21 agent and also catch up with Tom Panos. And I would imagine give us one of the last auction wraps for the years, Charles.
Yeah, be pretty close.
Coming up. Property Fast Track tonight. Charles Tarbey's here. Nick Bennett with you and Kayley Harris too, 13 12 83. And emails in on talkinglifestyle.com.au. One here tonight from Ian for you, Charles. He read a Fairfax article by Jessica Irvine who spoke about moving to Hobart and buying homes. That's plural. Do you know much about Hobart? I've looked online and it looks affordable.
Yeah, I do, and it's very affordable in comparison to the suburb I can see that Ian's from in Ringwood, Victoria, which is a great location.
Yeah.
It's affordable because, for obvious reasons, it's land content price. It plays a big component when it comes to buying a property. You can build a property for $300,000, you can buy a block of land for $100,000, or you can buy a block of land for $500,000. So in Hobart, the land is relatively cheap. The biggest issue is if it's for investment, Ian needs to be aware of the fact that a lot of investors have poured into that area because they couldn't afford anywhere else. This could indicate in the future a decline in rents or a decline in opportunity to lease to a tenant, which would mean that investors need to make sure they have money left over for vacancies just in case.
And what's a good length of time to, 3 months worth of payments or 6 months? Or?
I'd say 3 months, but I was speaking to some clients in Perth recently, or they're not clients of mine, but I'm a client of theirs, and at a restaurant they have, and they said they had their property on the market told by the agent $590 to rent it. That's now at $450, and they're offering a month's free rent.
Gee.
Wow.
So, Perth is on the way up. It's changing, but, just pretty difficult there.
Yeah.
Thanks, Ian. Melbournians keeping their eye on Tassie. Is it true that Melbournians are simply Taswegians on their way to Sydney? I have heard that.
What was that proof that Tasmanians can swim? Is it Adelaide?
Stop it, you two.
That's what I heard.
Now, let's get a local area real estate snapshot. Time to go around the grounds thanks to Century 21's extensive national network of real estate agents. And joining us tonight is Aziz Hoque. He's from Century 21 at Glenfield. Welcome to the program, Aziz.
Good afternoon. It's Nick or
Yes, hey, how you doing? It's Charles and Haley, Kayley and Haley,
Whatever just call me.
and John,
Hi,
Barry,
Hi,
panel,
Nick. Hi, Kayley.
and I just might add, I love Adelaide too. By the way, I shouldn't have said that before. How are you, Aziz?
I'm good.
You're in a very strong area. We were talking about your area earlier on because as you move past Campbelltown, Ingleburn, Glenfield, all those areas have experienced so much growth. There's so much happened since the M7 was open. All of those new suburbs that have been opened on the other side of Narellan Way, right across through there. That whole area has expanded magnificently. Why did you choose to operate in that area?
Glenfield is actually, Charles, is next booming suburb so far I know from Bankstown. Biggest, there's a big business park coming in Moorebank, just opposite from the barrack. And there is a 2,000 units coming on Edmondson Park and Bardia area. I don't know if you guys know it. And all the railway line, which is converted to R4 zoning soon, which is within two years' time, that will convert it to, again, the unit and like townhouses or villas.
Fantastic,
So,
yeah. And add to that what we were talking about before, Badgerys Creek, just on the other side.
Yes.
So how much is one of those new apartments going to cost me, Aziz? A brand new apartment, one of 2,000?
Two-bedroom unit started from 550 onwards. One bed roughly around 450, with a study maybe 450 plus.
And you've got transport there as well, haven't you?
Yes, Edmondson Park got a station. Leppington has a station. Bardia, they're using the Edmondson Park station, which is just opposite from Edmondson Park.
And what else is there around Glenfield, Aziz? What sorts of shopping centres, things like that, schools?
Schools, we got two school, Houston Park Public School, which is a very good school in the area, and another one, Glenfield Public School. There are two more schools at Edmondson Park, but a little bit far from the Glenfield. But they have people who are in up part of Glenfield, which is called Panorama Estate. They're using those schools. Schools and a few shopping centres coming, again in Edmondson Park.
Aziz, thank you so much for a snapshot into Century 21's Glenfield office.
Yes, and happy birthday for yesterday too, Aziz.
Thank you. Thanks, guys.
Good on you, mate. Enjoy your night. 13 12 83. Charles Tarbey's here. Mark has called in with a question. G'day, Mark.
Oh, g'day, guys. How are we?
Going well, thanks.
I've got a question about Perth. I'm looking at Perth as maybe a place to invest.
I like Perth. I've been talking about it a lot only because it's dropped so much. And I talk to the officers there and there are so many people there at the moment that purchased properties 5-6 years ago. The boom came and it went and they're now...
Yep.
Their properties are now worth what they paid for them 4 or 5 years ago. And so there are many locations. Depends what you're looking for. If you're looking for investment or if you're looking for social or a holiday, you go down to Mandurah and you look at all of the coastal properties, you look at all the canal properties. They're just incredible value when you look at what there is around the rest of the country.
Charles, what I'm looking for is an investment. I'm looking at maybe a dual income property, if they have them over there. Somewhere I can maximise my return and also gain capital growth.
I can tell you that some of the areas that have been really depressed. I was talking to one of the chaps there who has the C21 office in Ellenbrook, and they've been really struggling. That's a lot of new area, major shopping centres. It's reasonably north of Perth, but the developments have moved even well beyond Ellenbrook now, and those sorts of locations that have been depressed for some time are the areas that I'd be looking at.
Okay, thank you so much.
Pleasure, mate.
Thank you.
13 12 83. Charles Tarbey here for a few more moments as we do Property Fast Track tonight, as we have a look at the auction results. And welcome on board Tom Panos, an auctioneer and a 2-decade veteran of the business. G'day, Tom.
Hello, Nick. How are you?
Well, thank you.
Charles, how are you going all?
Well, thank
Hello,
you,
Tom. Let's start with Melbourne, which had its second busiest weekend of the year. 1,837 auctions held and a clearance rate of 67.4, above or below expectations. Tom, what do you think?
On par with expectations. I mean, it has been dropping. I mean, the same time last year, Kayley was 78.4%. For most of the last few months, while I've been on the show, Melbourne has been in the low to mid-70s. Kayley, it's been coming down, but most weeks. But at 67%, we're still saying that 7 out of 10 sold at auction on Saturday. And that's pretty good because there was nearly 2,000 auctions, so I think that's good.
7 out of 10 almost. So, and from your perspective, Tom, were you working as hard as you did at the beginning of the year to sell these places?
Much harder, much harder, much harder.
You said it was going to happen to you, Tom. You said it was going to happen.
I said it. And in fact, what I've done is I had all these people abuse me over Twitter over the last few months. So I've gone back to each individual person and said, told you so.
Good on you.
Everyone loves someone who does that, Tom.
Sweet.
So do you think the turnaround in Sydney's market is visible? 990 auctions with a clearance rate of 58.7. Now, we could say Sydney's run out of puff, or is it just perhaps that time of the year?
Well, okay. It's a little bit of both, but Kayley, there are certain properties that are still going off. I auctioned a two-bedroom villa with a reserve of 1.3 in Des Moines, and it sold for nearly $1,650,000, so $350,000 over reserve on Saturday, and that was a classic case of two people really wanting it. What I find is 1 in 10 properties still goes off if it's got something about it, and this one did. What it was is people wanted no stairs. So you had two couples particular. They were 80 years of age. They wanted to live in the same area. They had their home, and they were going to sell their home for a few $1 million, so they didn't care what price they'd pay for it. They still go off. It's the other ones that have got a few crosses next to them that are being punished in this market.
Did they get water views for that too?
No water views, no Nick. No, not in Des Moines at that price. You've got to pay more money than that, Nick.
Okay. Mate, what about Brisbane? What can you tell us about Brisbane over the weekend?
46%. Okay, they had 183 auctions, so their clearance rate versus last year is a little bit higher. Brisbane, look, if Brisbane's got a clearance rate which is 50%, I don't mind that because I know that by Friday they've normally sold some more properties, so their clearance rate by the following week should be close to around 70%. So I think that's not too bad. But 46% and 183 properties, that's not too bad.
So, Tom, we're nearly at Christmas. How many more auctions ahead?
I've got auctions this weekend, so that's a full day, which is the 16th. And on the 23rd, I did book an auction in on the 23rd of December. So I'm going to be working right through. Next week's going to be a lower week. 23rd of December, the only people that will be working are maniacs like me.
Yeah.
Everyone else will be at Westfield. But it's come right through to Christmas. There's still lots of deals going on as we speak, but.
Well, that's good. You see, if you're going to work on the 23rd, you'll have more coin to buy us, much better quality presents.
Correct.
There's an upside to this, Tom.
You're thrilled, aren't you, Tom?
Yeah.
Tom Panos. Sorry, mate, go on.
I just thought about it, that I'll have the money, but the shops will be closed.
Indeed.
Oh, of course they will, yes.
You go online, Tom.
Are we speaking to Tom next week?
We are.
Oh, we're good. Okay.
We love talking to you, Tom. Thanks very much for your time, mate. 13 12 83. Jim has dialed in on Property Fast Track. How can we help you, Jim?
Guys.
Hi.
Hey, guys. I trained with Tom this morning at the gym too, by the way. Question for you, Charles.
Yeah.
If Melbourne is supposed to overtake Sydney in terms of population in about 20 years, whatever it is, does that mean demand supply? And that's with anything in capitalism.
Yep.
If demand supply is higher there, will the price of property in Melbourne exceed Sydney?
They're saying 8 million people by 2051 in Melbourne. I would say to you that that's normally the way it would go for sure, but given that Melbourne is very better organised than New South Wales, there's a lot more suburbs that can open up, and they're still planning those suburbs. I think that it may be a steady, strong market. I wouldn't say it would go crazy, but I certainly have liked Melbourne, picked it all year long, along with Canberra, and those two markets have been very hot this year. They're still hot in parts, and I think that the supply and demand issue, both in Canberra and Melbourne, is very, very well catered for, unlike Sydney.
Good on you, Jim.
Thank you.
Keep training, Jim.
Thank you. Thanks for the call.
Bye.
Been great again, Charles. Thank you for your time.
Thank
Charles
you.
Tarbey, of course, from Century 21. We'll be back after the break.